Well, still in the midst of figuring out what the Samvat ahead 2082 is going to be like. And we've got another investment guru. He doesn't come very often on television channels, but he's managed to take out time from his very busy schedule and make it to the ET Now studios. Please welcome Rajat Rajgarhia. Rajat, great to have you on ET Now.
Thank you, Aisha.
After a very long time, what has kept you busy? Because the market at an index level has done nothing.
Well, our job continues to keep doing in-depth research, keep bringing good companies, help investors. And when you see times like this, I think the value of the research and the access grows even more because not everything is making money. So you need to figure out what really will help your clients outperform vis-a-vis the rest.
So what will make money in the year ahead?
Yeah, I think two very important things. We are at a very important inflection point, if I may say so, right? Last 15, 18 months, we have seen a lot of excesses getting weeded out from this market. And this 15, 18 months of consolidation has made things very rational. But at the same time, we have seen a super charged up RBI and government fueling a lot of growth coming ahead, right? This is a real Diwali when you look at the consumption trends in the market. We are a growth economy, right? We can't just buy stock because it's cheap. We have to buy a well-valued stock where the growth is coming back. Till now, we had pockets of growth. I just think in the year ahead, you will have a little bit more broad basing of growth. Early trends, I think enough guests have said in your show that autos are showing early trends. You are seeing the stocks performing. Consumption will be a very mixed bag. Not every category will perform, but you have to be in the category which will grow. And then you have the many newer spaces which are coming back. We may get very excited by how these quick commerce companies are doing, but please understand, in a 10, 20-year journey, they still have a 2-year listing history right now. So a lot of wealth is yet to be made. But I think broad basing of growth is more important from here rather than concentrated growth, which was last 12 to 15 months phenomena.
You know, it's exactly what you said, Rajat, that while there is growth, but it's also about the right price to pay for that growth. So where do you see that balance actually happening? Because most of these consumption plays are also expensive.
Yes. So, a lot of these consumption plays that you look has to look historically how they have been valued, right? Generally, if a company grows at 10%, then a 30p looks expensive. If a company grows at 25%, maybe a 30 to 40p also helps you make money till the time you are riding that growth. I think look at the big sectors. For example, if you look at banks versus IT, right? I think that IT you will probably see next few years growth in a range of high single digit. So a 20-25p has very little room of re-rating. But banks which were growing at about 8-10% for the last 1 year, if can grow at 15-20% year on next 2-3 years, then for them at 15p, they will look very attractive, right? So I think you have to just value multiples in context of the growth, and always better to pick sectors where you can see early signs of some growth returning, right? These may be very early signs, but then markets typically tend to discount stocks ahead in the cycle.
And where within banks do you find favor or value? Because you have some of the larger private sector banks at 2.5 times book. And they, as you said, could well be 15-20% growth kind of companies. And then you have some of the smaller names at sub 1.5 times book, which could grow with another or have an alpha of around 5 to 10% on top of that 15 to 20% band that you're expecting large cap banks to grow at. Is that the better pocket? But obviously there's risk involved as well. But is that the better pocket, you reckon?
So I think there are 3 buckets of banks right now. I will come to the mid bucket, which is the mid-sized private sector banks. And I think the very interesting trend that you are seeing is some level of ownership changes with a more bigger promoter name coming in. You saw in Yes Bank, a big investor. You may see some other banks over the coming days also, which may see some parentage change. I think they are signs of big confidence of large foreign capital coming to bet, which was not the case for the last 10, 20 years, right? Yes. How they come and shape up the opportunity, we will see. The first bucket is the large banks. I think they are very attractive because they're high quality franchises and you don't have more than 3 or 4 large banks. Then you look at PSU banks, state-owned banks. Again, there you don't have more than 3 or 4 large banks. So such a large sector, your investment options are limited to actually just 6, 7, 8 names. And then you can pick, right, whichever bank you think does well, you can pick. But imagine a 25-30% weighted sector concentrated between just 7, 8. And when growth comes back, then I think everyone does well. Someone does better than the other, but the sector does well in this case. And lastly, staying on financials, you have NBFC as a pocket, which in my view is becoming bigger than banks from a stocks point of view. Absolutely. You have maybe a dozen HFCs, auto NBFCs, microfinance, SMEs, gold loans. That universe has become 30, 40 stocks and maybe growing more. There again, you can cherry pick. So I think lending as a space, lower rates, better growth, reasonable valuation makes a good case for portfolio allocation.
The other thing, and I was talking to Ramdevji as to what the Nifty picture is going to be like in the next 5 to 10 years, and he said internet companies. He said slew of them are in the pipeline, yet to IPO, but he said consumer tech, some of these platform plays, they are the ones where that next beat of profit pool is going to get created. Tell me, what are some of the interesting companies that you've come across within that space?
Well, there are few, but I wish we had a lot more. Because if you look at the world, if you look at US, how they have transformed as a market in the last 5 years.
The first movers also, right? It's unfair to compare us with them.
Can we be a great followers?
Yeah.
Because if we can be a great follower, we will still create 5 years henceforth a wealth similar to what they built 5 years back, right? My key point here is on the internet or the platform, we still have very handful of companies. And again, there you probably have one Zomato or Eternal at maybe 3 lakh crores, but rest are still at about close to 1 lakh crore. I think if you look at large cap definition, top 100 company ends at 1,10,000 crore today. To get into Nifty, the race is intense. This space is very exciting, but I think as a country, as a market, we need size from some of these companies to make case for allocation, right? Today, you have probably 2 or 3 such names which everyone can just talk about, and the rest of the ones would be a $3 to $5 billion market cap. I think we need some companies which are like $100 billion market cap category in the next 3-4 years, and not just 1, 2, 3, but maybe 10, 12, 15. I think going forward, the IPO market will help bring such companies to the market, and let's see how they value. Nifty will be very different because if you look at Nifty aggregate, I think the large part of the growth is outside the Nifty aggregate. So they will make the change.
Next 50, next 100.
They will make the changes, right? I think we definitely need a lot of new age representation, but it will take time. It is not going to happen anytime in the next 1 to 3 years.
Sure. And Rajat, just continuing on that theme, you've got a 3 lakh crore rupee plus kind of market cap that Zomato sits on. Now, I'm taking Zomato only as an example. The top line of Zomato is 26,000 crore. Is the profit pool that large? And I know they're growing extremely fast. Is the profit pool that large to justify the kind of valuation it's sitting on? Or is the market relying on pivots into different businesses? And therefore, is that a very real risk in some of these companies?
In some, yes, which is true in every sector. But I think you are going to see some very mega companies coming out of this space, right? And a lot of these companies, first of all, we don't know how we should be valuing them today, right? Traditionally, we have been a fan of P. That is what shareholders carry, but that is not so relevant right now. But coming to a specific question of profit pool, I think there are going to be 2 components of profit pool for these companies. One, that they are going to create, and second, that they are going to take, right? And in each of the sectors, Harsh, there will be only one or two winners. We are in an era where no sector will have 5, 7, 10 winners. Or even if there are, the value concentration will rest with number one, very dominant, number two, respectable, number three, barely. So whether it is quick commerce, whether it is any space.
Telecom.
I mean, airlines, right?
Playing out in pretty much all the sectors.
This is how it
across the
will.
board.
This is how it will continue to be. So your best options is to have number one or some value for number two. I don't think investors will really try to trade off to the third, fourth, fifth player. So that is where a Zomato or an Indigo or any other company is going to benefit from.
What else is looking interesting in the market? Any of the traditional economy, any capex names, etc., which are looking good to you? Commodities, for instance, they've had a great year so far.
Yeah.
Anything from that?
So, Aisha, two things that I want to leave as a thought with. First, if you look at last 25, I mean, this is the quarter of the century we are ending now, right? Last 25 years, we grew compounded at about 10, 11%, right? But that time we were about $300, $400 billion GDP. Today we are 4, right? We will continue to grow at 10, 11%, but we'll grow on a base of 4 trillion GDP now. So we are going to create one new India today, what used to be cumulative in 2000. So just to sum it up, 25 years last were growth. Next 25 years is size into growth. We are going to create some new sectors every 3, 4, 5 years, right? That is one. And I think second most important is today the traditional way of investing has probably not made as much money when you look at markets like US, etc., right? So I think we have to be very agile and we have to be very flexible, move with the time, right? Lastly, couple of our very, you said, favorite themes. I think capital market theme is going to get only larger in the times to come, right? When you look at the whole pool of money which is coming in, right, they are going to create many second derivative, third derivative impact into many businesses, right? Again, here the top 2 or 3 will take a large part of the cake in each of the segment, right? That is one. I think the second space which is very underrepresented or not so well covered is the whole travel and tourism. I think in this country, when you look at 140 crore plus people and the infrastructure build-up happening, spending power happening, right? We will see a lot of new concepts coming on the travel and tourism suiting this country needs, right? That will be a space, I think, next 3-5 years, you guys, we guys are going to talk with. Today, the traditional could be a hotel or an airline, but you will see many new pockets of theme coming there. And I think the third most important thing is that last 5 years in the whole consumption boom, you saw, suppose, a hospital growth coming back and big re-rating, right? We have to just keep figuring out where is the consumer going to spend the incremental income, because that will create a disproportionate profit pool opportunity for us in this space, right? Size into growth, think about the number 1 or 2 player, buy them early, let them do the job. I think a lot of compounding opportunities are there.
That's such a lovely thought, actually, and a great formula to go by. Size into growth now. But Rajat, thank you so much for your time today. Great speaking with you, and happy Diwali once again.
Thank you. Happy Diwali to you and everyone. Let's hope for a great next 1 year in all forms for our economy, markets, investors, and for everyone's health. Thank you.
Absolutely.